Volatility incarnate. Truth be told, this can be said about all penny stocks, but I'm thoroughly impressed by the roller coaster twists and turns that ECIG share price makes. The only question now is, are the investors in for a joyride or for a horse show ride? ECIG are definitely one of the most solid companies I've seen on the OTC markets. It's a legitimately built business, albeit one that has fallen on hard times. To elaborate, let me tell you about the company's past performance. We're going back to the turning point, March 6, 2014. Then ECIG reached a 52-week high of $18.80. Now, more than 9 months later, the landscape is completely different. The company closed the last session at exactly 14 cents per share. It's a shocking difference, especially if you take into account that there were probably people out there who bought in at the 52-week high. Those people lost around 99% of their money, which just goes to show you how important due diligence is. But I'm by no means criticizing anyone. The big crash had all to do with this, the FDA Regulations of electronic cigarettes. When the regulations were first brought up, a terror swept the industry. It practically imploded. This definitely initiated the company's fall, yet at the same time, there was another reason that pushed ECIG down the stairs. The company currently has 82 million shares issued and outstanding. Of those in 2013, 10 million were bought for then the incredibly discounted price of 25 cents each. Since the price was at dollar levels, this should paint a clear enough picture. The investors holding these shares most likely flooded the market and profited immeasurably. But let's turn the page to something else. What about you, the possible investor in this company? What can I say that you would be interested in? There's one thing many people may have overlooked. Here's my point. Gross profit has actually gone down quarter by quarter. In quarter 2, it was 6.8 million, while in quarter 3, despite the 40% revenue raise, it was 2.3 million. This tells me that ECIG is sacrificing profit margin for growth, which can be risky and lead to both good and bad things. The results for next quarter will be the telling answer. Either the exposure will lead to a higher growth soon, or it won't, which will be a loss. Additionally, if you've been following the company, you may remember that in October, its NASDAQ IPO offering was postponed. To actually make the transition, the management will definitely need to make the obvious. Get the share price going upwards on a stable basis. But there are fears on investor boards that there's another way to do it without investors, and that's a reverse split, which is a whole other can of worms. This is Martin Nadenov for Hotstock.com.
I have a small amount of money to invest and I want to gamble in the market. I'm looking for a penny stock that'll go up and turn it into $100,000 or $1 million.